I will introduce quickly the four members of our workshop. First of all, we have Thibaut, founder and CEO of Yespark. Then we have Justine, who works at LiveMentor as the head of content and CSR. We have Nicolas CELIER, managing partner of Rémi, and Rémi, who worked for the EIF on the mid-market. Okay. And I will let them introduce themselves and their problematics more deeply within the roundtable. But the idea was to have those 4 points of views to see what is the reality of moving to impact. And maybe we can start with you both, Thibaut and Justine. And Justine, I will start with you. Can you explain us quickly what LiveMentor does, and why did you transition to impact, or do you want to accelerate in the impact and put it at more strategic level in your company?
Yes, of course. LiveMentor is a training organism. We are training entrepreneurs to help them to develop their business and to help them live from their passion. We really have a strong view of the persons that we are training to help them develop their business, to help them really create their job and create more jobs when they succeeded in creating their first job. The impact was already in the core of our company from the very beginning, because when you start your company with thinking that you're going to help entrepreneurs, then your impact is already contained into this vision. And it was really starting from the beginning that we thought was going to be the core mission of our company. So we have impact on different levels already from the very beginning of the company, and right now we are trying to develop more impact. So from the very beginning, we always wanted to make sure that everyone had access to training wherever they were in France. There's a belief that entrepreneurship is only happening in France and only happening in Paris, and it is not true. You have a lot of people who want to become independent everywhere in France. And for example, in our case, 80% of the persons we train actually live outside of big cities. The persons we train are more or less, on average, 42 years old. They're persons who are going through a transition in their professional life, and we help them to develop this transition and to go further with this transition. So impact was already in our core business from the very beginning, and right now we're really looking to go further.
Yeah, so at Yespark we have maybe a more complex relation to impact, because we are a mobility platform for cars, helping drivers to find parking for their cars. So starting with that, it's not the impact is not so sure. Positive impact is not so sure. So what we do more specifically is we help on the one hand drivers to park their car either for classical cars or electric vehicles, and on the other hand we help property owners, big real estate property owners, to help optimize their parking lot either by renting the spots they have vacant, they have free, either by installing charging stations. And this charging station business we have is more recent. We've been developing it for 2 years old now, and the company is 8 years old. So at the beginning the impact was questionable because we help cars, we are shifting to a much more positive impact strategy because we think that this is where the market goes. So I think that it's maybe interesting to have to see the difference of point of view on this subject. We are, I would say, not an impact company by ambition, by conviction, or since the beginning. We are de facto becoming an impact company because this is where the market goes.
Okay. What about you, Rémi and Nicolas, on the investor side? You both, at different level, invest either in impact funds or in impact companies. How come do you choose to invest in those kind of funds or companies?
Well, on our side, this is coming from because we are an EU institution, so the agenda is also driven by the European Union members and also the European Commission. As you may know, the European Commission is asking for a 55% reduction of CO2 emission within Europe. So in order to foster this objective, and in order to address these new challenges, we've been asked to deploy additional capital in the environmental sustainable companies and funds in terms of a strategy. So this is where we are coming from. Again, before that, we've been asking to foster the market, because the market is quite new, and of course the idea and the mission of EIF is to fill that gap.
Okay, and maybe to follow on with you, what does it change in your job? Does it have consequences in the way you choose the funds you want to invest in?
There is, I think that there is some changes clearly, but we are doing the same business. So we are making fund investment. So investing in a first-time team, first-time fund, investing in a generalist fund, we are looking at a different type of characteristics. But for the impact angle, clearly there is additional element like extra financial element. We need to look at also the profile of the management team of the fund, who will be running the fund. So all the things are a bit different to what we used to see.
Okay. Nicolas, maybe the same question. Why did you choose to move Ring to at the beginning generalist fund, the first fund, to an impact strategy, and what does it change?
The way we choose first is a responsibility. When in our work we have an impact, so like having the most positive impact we can is a responsibility. Second, it's fun. It's to have a job where you can both earn your money, live, have an exciting job, and contribute positively to the society. Is a dream job that everybody, most of the people wants to have that. And then the difficulty is when we started, we had a fund, a growth tech fund, which was not an impact fund. Even though we helped company, we invested in being more sustainable. It was not an impact fund. And we had the idea to launch a tech impact fund. So we had two funds, a non-impact and an impact fund. And then it was, in terms of, it was not very consistent. It was quite problematic to, when journalists would go and say, you are an impact fund? Yes, we have an impact fund, we are not just an impact fund. And for the teams also, when we received the impact companies, very positive, changing the planet, this companies goes to the impact fund. And all the shit and shitty stuff go to the non-impact fund. So it was very difficult, it was not manageable, it was impossible to do so. So we decided that all funds would do impact, one impact, full impact and one half impact. And then for a matter of strategic differentiation, as well, it was not clear. We say, okay, now there's a lot of money everywhere. We have been the kind of pioneers on the tech impact scene in France. Let's assume that, let's be full impact investors, so that impact entrepreneur really wants to work, recognize us as full impact investor, and others will not be interested in having impact investors, so we won't waste time with them.
And maybe to all of you, because we talk about this transition that we see is done at different level. Can you give us a quick example of how it changed the mindset and the culture? Because transitioning an impact as a strong impact, without any joke, about the way you think and you see your mission, and how does it reflect in the everyday in your everyday job? Maybe with one example. I don't know, Justine, if you want to start.
Yes, so for example, we at the very beginning of LiveMentor, we had one training which was dedicated to dropshippers. So we were helping dropshippers to launch their business. And actually, we saw that it was attracting persons into our company that were not really matching our values, because we were thinking about dropshipping as a way to accelerate the first starter of your company. And actually, it was not, for us, it was not going to be a sustainable company. It was supposed to be dropshipping at the very beginning, and then you change a little bit the business model to make it more sustainable. But we saw quickly that it was attracting persons who were seeing dropshipping only as a global, as the future of their company and not doing it completely right. So we took a radical decision. We chose to stop selling this training, even though it was bringing money. We just did not feel comfortable with helping develop this kind of field, especially with all the bad impact it could have.
Thibaut, what about you?
Well, for us, of course, impact is about helping electric vehicle charge, and it's we are developing a whole new competencies and a whole new business. So of course, for us, it's very, very important, and it affects pretty much every corner of the company, from recruitment, because we are recruiting people that want to sell this EV charging product, to product design. So I don't have a very specific example, but because it's becoming our business, helping EV charge, it impacts the entire company.
Okay, Nicolas? An example of
the example is when we are not full impact, we will look at exciting company, there is good companies, and at the end of the process, we will say, this company, by the way, what is the impact? What are the KPI impact? How is it? Can we find some positive impact in the companies? Since we changed to a full impact investor, from the very beginning, we have a kind of double analysis, double view on companies, business and impact. So the first day we see a company, we say, okay, what could be when we have to design an impact business plan and impact objective, what would be the impact KPI for this company? So it becomes impact becomes a reflex, a double track analysis process, and this enables to be performing much better, aligning the team view on companies and not wasting time with companies we'll be reviewing, and at the end of the day think that they are not impactful enough, or some of the team will still vote for them, but with less clarity and efficiency.
Okay.
It's a bit the same for us. So it's really about the subsector with the high growth impact potential, extra KPIs or extra financial elements that are very, very important. And again, as I said before, and so I will repeat myself, but it's also about the profile of the investment team. So there is a change compared to the traditional and generalist funds where we were mostly driven by the performance. Here it's a bit without forgetting the performance because it's still there, but we still need the extra financial element that is key for the impact market.
Yeah, and you're still at the beginning, so it's not that easy to have a clear view on what is a performing fund in terms of impact. It's still, do you picture it, or is it difficult to picture?
No, we don't have any benchmark yet. Okay. So it's clear that we are in a market that is in its very early stage. What we have been doing in the past, since 2013, it was more social impact fund.
Yeah.
Here, what we have been asked, especially what I said at the beginning of the first question, it's more climate driven. We still continue to invest in social impact element, and so this remains an important element for us. But the climate angle is becoming one of the key for us. But it's true that it's difficult to have a clear benchmark between the funds.
Sure. Okay, maybe Justine, if we go back to LiveMentor, so you consider the transition natural because it comes from the beginning, it just accelerated or being more important? How do you make it real every day? Did it change the way you monitor your activity? We talk a lot about impact measurements. Is it something that you have progressed on?
Yeah, actually quite a lot, because really the company exists only to have impact on the entrepreneurs that we are training, and without measuring that, there's no point. We don't know if we're doing our job right or not. So since the very beginning we started to do trainings, we actually have impact studies evergreen, so meaning that at the end of every training, every participant gets a questionnaire after 3 months, after 6 months, after 1 year, and after 2 years to see how their project developed. And from those figures, we see that after 1 year, 90% of the persons interrogated are still working on their project, and for 60% of them it's their principal project, meaning that they probably left their job to focus on this project. And we also have a culture of sharing the good impact that we have with all the persons that we train within the company, meaning that we have a Slack channel to chat with everyone in the company, and every time that a mentor receives some news from their students, they actually share the good news with the screenshot of the student being like, yeah, you see, you trained me 6 months ago, 1 year ago, and actually right now I'm doing this much income, you really changed my life, etc. We talk with our customers on a daily basis, and we integrate their feedback into what we can do to go further. For example, we had I was on the phone like 3 months ago with a woman who is in a wheelchair. She's been on the wheelchair for the past 3 years. It's going to be permanent, and she was telling me, almost crying, that we actually changed her life because thanks to our online training, we saved her career. And I'm really quoting her. I was not expecting that, but it was really a strong moment because this woman was living very far from everything, and she told us that thanks to our training, she could actually develop a way to manage to save her career and to develop her business. So,
thanks. Thibaut, in your case, once again, the case of transitioning in a new kind of business as well, do you consider that to strengthen this transition movement, do you need a new brand? Do you need a new organization? Do you need to be maybe labeled to be a B Corp or entreprise à mission? Do you consider that as a way to help the transition?
I think that the more effective way to help this transition would be to change the culture or the values of the company, because it's really who the people who work for us are and what do they aim for, and it's I think it's a real core decision. And after that, after you've made this decision, well, you've got to communicate it, and a label can help communicating it to your team or to the outside of the company. But I think that the key thing is, do you want this impact mission to be core in your values, or do you want to be like an outsider? Where do you place it in terms of within your values? I think this is the key question, and the rest is our tools to help clarify it and communicate on that. I think personally.
And one question, do you consider that having a chief impact officer is something that could help? Because we hear a lot about this new role. What do you think?
So actually I'm the CSR responsible in the company, so I hope I am useful somehow. No, but it's in addition to my current job at LiveMentor. So in our company we chose to have a very collaborative way to deal with it. We have the chance to have investors who actually really push us into this direction, so Rémi, for instance, and we chose to do it via an application, meaning that every person in the company could apply to participate into the task force related to the CSR, and I'm just helping to do the coordination between those 10 persons who actually volunteered. And yes, it's helping because we are gathering every month to follow where we are. It's really helping us to follow the topics. For example, we just launched a carbon footprint audit to understand where we stand there. And right now we are trying to focus on we know that we have an impact on the companies and the entrepreneurs that we help. But now our question is, what is the impact that those persons have on the planet, on social, everything. And this is really the kind of conversations that you can address when you actually have routines to spend time on it. So I think it's okay.
What about you? What do you consider is
yeah, I think it could help specifically to align people and being sure that everybody has the same vision of what is impact and what do we want to do and what we don't want to do. Because of course everybody has its own opinion about what is impact and what we need to work and go in the same direction. So I think this person, this job, well, is important for that, and if he does that properly, it will prevent the company from maybe losing the track, and it will help the company to go further into or towards impact.
And this leads me to a question for the investors, because indeed Thibaut speaks about losing the track maybe in this transition. Do you consider it as a risk because you want to invest in impact? What if the impact doesn't happen? Or how do you manage and mitigate that risk? I don't know who starts.
Okay, let's start. No, but yeah, it's a risk. When you're for impact native company, they have a track record. The intention is there. For impact movers, there's a risk that the entrepreneurs come and see an impact fund because you want to raise money, but that his intention may not be there. And the second risk is at the end of the day, will you have an impact or not, is still a risk. So yes, it is a risk. The way we mitigate this risk is being very harsh on what we expect from the impact. For instance, we put in the bylaws of the company its mission and saying if the mission changes, you should buy us our share or we should help us to exit. We ask a business plan with impact KPIs. We ask a yearly audit on the impact. We ask a board that are dedicating to impact. So if entrepreneurs are not very, don't see the real value in going down the impact road, the impact journey, you see, I don't understand the value, I don't want to waste my time with this entrepreneur who I see too many things of bullshit impact. I don't take this investor, sorry, I take another non-impact investor, it make my life easier. So that's the way we try to naturally attract really impact entrepreneurs and reject also those that are not motivated. But there is risk, but as an investor, we always like to look at the upside. The upside to it, and that's I think that's what I love. Sometimes entrepreneurs say, okay, I come and see you, I feel we can have an impact because we are training very young, every entrepreneur, but not Station F entrepreneur, people that are doing the hairdresser, want to become a hairdresser. So we feel that naturally we have an impact. We feel that we could have more impact and we need an investor to go deep into this track. And the great thing is sometimes people discover that, yes, they can have much more impact. Having more impact, they have a much more differentiated business and they are performing better. And that's a great upside if you are very serious on impact and you find the best way to align business and impact, you can discover that the impact can be huge and the business can be even better because you're much more differentiated from the competitors.
There's a lot of similarities with from an LP and or a GP perspective because indeed we have also some legal protection based on the discussion that we had because we do quite in-depth due diligence, so we can confirm that. So we do quite a tour of some due diligence. We are also quite robust in terms of negotiations on the legal aspect. And one of the safeguards that we try to implement and also to provide a strong alignment of interest between the GP and the LP, and also to make sure that the GP demonstrate quite important impact considerations. We try to implement a mechanism that is linked to extra KPIs with the carried interest. Most of the money made by the GP is linked to the carried interest, so we try to push the manager in this direction like you do with the CEO, actually. So it's very similar.
I think that's a good point. If you are serious about impact, you should find a way to align compensation on business and impact. If you say, well, we're an impact company, but people are just paid on profit, something is missing, or impact is somewhat secondary. If you say we're an impact company and you will both your bonuses or your pay will be both on impact and profit, then everybody within the company wants to find the best possible alignment between the two and for the best of the two, not once against the other. And then, as investor, our investor asks us, and we propose that our performance shall be 50% or 50% based on the impact our portfolio company have. Then we tell the entrepreneur, but that's something you can do for you. And by the way, we could ask, you could give some stock option or stock to all your employees, so that all your employees can participate to the value created. And part of this value could also be indexed on impact, so that your shareholders, the manager, and all the employees will be pushing in the right direction and having an interest to find the best possible alignment between impact and performance. I think this is a very good point.
Maybe another question for you, Rémi, because you have, as a LP, you have a good vision of the market because you see the funds that then invest in the companies. Do you see a big change in the allocation, in the funds that are created, that are raising funds, in the evolution of strategies towards impact? And how do you qualify it in Europe? Maybe if you have a vision also in the US?
Well, in Europe, indeed, there is a shift. Now funds are more thematic oriented. We still see generalist funds, clearly, but the trend is going to more thematic strategy. So this is one element. We also see a change in terms of regulations with the SFDR 8, SFDR 9. Which are pushing, I would say, GPs to be more committed to sustainable, to climate action, etc., etc. So, indeed, there is an evolution clearly towards that trend, but not. I think it's going step by step. It's as I said, the market, especially in the lower market segment, we see much more evolution and more rapid evolution in the VC side. In the mid-market, it's a bit more slower.
Okay. And on the other side of the spectrum, what about the pressure you can have from your teams? Because we all talk about the new generation and how much does this transition to impact as an influence on the way you recruit, the profile you recruit, and how you manage them actually?
I feel this pressure is growing, clearly. And this is why aligning, as we said earlier, aligning everybody is important. But I feel it being more and more important, maybe as time passes, and maybe as we as a company shift to this impact, more impact business.
Yeah, I agree, and also we see it from the people who work inside the LiveMentor, because every week we have a weekly team meeting with all the company, and every week we have questions about how the CSR project is going and what is happening, and we do regular updates about all that. So it's really something that we can see people are really interested about, and they all want to prolong the discussion every time we start it.
I think that the pressure is at every stage. So the member states are putting pressure on EU bodies. EU bodies are putting pressure on funds in which we are investing. And then it's escalating to portfolio companies. So it's coming from other parts.
Employees also putting pressure on the web.
Yeah, exactly.
That's a very optimistic conclusion. Thank you to the four of you. Maybe there are some questions. Don't hesitate. So if no questions, thank you very much to all of you, and
Thank you.
I think we'll be the way back.
Thank you.